Have you ever incurred a penalty when you filed your tax return? Well, here is one reason why that might happen and how we can avoid it. So today, we're going to be talking about quarterly estimated tax payments. In order to pay them, to be required to pay them, you either have to be an individual or a business that will owe $1,000 or more in taxes to the federal government when you file your taxes. When would you need to make these payments and how much you would need to pay is what I'll be talking about a little bit. So to start, figuring out if you will need to pay and how much is a little 5-step process. So to start, you're going to do your own risk analysis. You're going to see how much income you're making and the sources of that income. So if you are a regular W-2 employee, it's likely that you're not going to meet that $1,000 or over threshold because your company takes out withholding for every paycheck that you get, and each paycheck is usually predictable, the same amount. Now, if you make any self-employment income from a small business or from, let's say, rental properties or a significant amount of income from investments or capital gains, then it is likely that you will hit that $1,000 or over and be subject to estimated tax payments. To start, you would need to make a scenario, an estimate of what you think your 2026 total income would be, and then, include your deductions, whether it's the standard deduction or you're itemizing, and then ultimately getting to figure out how much tax you would owe at the end of the year. Now, once you have that number, you are going to compare that to last year in what we call safe harbor. Now, safe harbor is an absolute minimum amount of taxes that you will need to pay for the year in order to prevent getting a penalty when you file your tax return. So in order to figure that out, you will use two figures. So you're either going to use the lesser of 100% of what you owed last year or 90% of what you owe this year. That's why it's crucial we do a little estimate calculation of what you might owe for this year so we can figure out those numbers. Now, if that is over $1,000, then we're going to have to divide that by 4 to figure out what your quarterly estimated tax payments are. You're going to have to go to the IRS and make those payments. Now, the due dates for those are, to start, they're going to be April 15th, which is also the tax filing deadline, June 15th, September 15th, and January 15th of the following year. Now, if your income is not going to be steady, you can also pretty much estimate 25% to 30% of whatever non-taxed income you're making is going to go out for taxes. So that would be a good way for you to save that money in a separate account. Now, also, when it comes towards the end of the year, you can also look at those safe harbor limits. And if you haven't quite met them, you can make an additional tax payment in order to meet that, so it'll prevent you getting any type of penalty. So that's pretty much it for estimated tax payments and figuring out if you're required to make them and how much. If you like this video, then I hope you would continue watching more. You would need to go to financialsymmetry.com and you'll hear more about strategies to help you and your family.